Peter, if you look at positioning in the euro, right, bets against the euro near their highest level since 2016. Earlier you were saying we could see some more dollar weakness. Does that mean you expect the euro to grind higher or just be vulnerable to short squeezes here and there?
I'd say, well, we'll have to see what the Fed do next week, obviously. But I think if you look at the euro, we've got a bit of a dichotomy in terms of positioning and sentiment. So as you said, as you noted, positioning is still quite short on the euro. If you look at risk reversals, both in the 1 month and 3 month tenors, we're actually now bid to euro calls. So there's a big distinction or dichotomy between what the market sentiment is and what positioning is. My guess is that if we get the Fed surprise, give us a dovish surprise somehow on Wednesday of next week, we'll see that short squeeze begin to manifest. So I think any move above sort of 114, we could even squeeze that little bit higher. So on the euro side, it's what we tend to see is basically, because it's a funding currency, the grind lower is really slow, but then sort of the unwind is very, very quick and sudden. And that's more or less where we're getting towards, in my view.
Right, so it sounds to me from what you're saying that actually the euro strength is going to come more from the dollar side rather than from the euro per se. And what about if we do get a more dovish ECB and in 2020 we start to get a rate cut, for example? Does that put more downward pressure or just very short-lived?
Not really. If you look at the deposit rate cuts, they're good for a one-off sort of capital outflow, right? And that's kind of what you saw in 2014. You know, if you look at sort of debt outflows from the Eurozone, they were very, very, very large and solid in 2014, 2015. That's not the case now, by any means. I think even a 10 basis point depo rate cut from the ECB will basically have no effect whatsoever, at least on the currency side of things. It's bad news for banking profitability, no question about that. But from the euro perspective, it won't really do a lot. And I think sort of euro is really at risk of becoming sort of the new Japanese yen, in a sense. The central bank has basically done as much as it can, and it won't really have all that much of an impact on the currency.
All right, and you are seeing euro at 114 by December 2019, according to your outlook. So, Max, let me ask you then, because HSBC had a great note out recently that I actually referenced the other day in terms of the euro having to do the heavy lifting for the ECB. But given what Peter said, can it actually do that?
Look, we're at 110, so we're not that far away, essentially, right? So I think the point here is, from an economic perspective, I kind of don't want to really own the euro. I keep here saying, you know, from people, oh, but everyone's already so bearish on the eurozone, and everyone's already so bearish on eurozone macro fundamentals. However, if you look at the forecasts, if you look at, let's say, simply GDP forecasts, the last time I've looked for Q2, you got Q2, Q3, and Q4. You got 0.3, 0.4, 0.4. That's actually, if you annualize it, that's even higher than potential growth in the eurozone. If you pinpoint potential growth around 1 to 1.5%. That's actually still higher than potential growth. So it doesn't seem to me that everyone's overly bearish on the eurozone yet. Well, you look at BTP Bund spreads; they've been pretty stable already. Right. You look at outright Spanish yields or French yields. So some of the reasoning, let's say, that Bund yields, FX hedge Bund yields for Japanese investors, for example, are now negative, doesn't really hold that much, because what we do see at the moment is, you know, there's Japanese investors, there's foreign investors in general turning to France. Now, France is sort of stuck at zero. Now they turn to Spain. Look at the Spanish rally, right? Look at the Portuguese rally. So they're looking at basically other markets in the eurozone as well. And as long as you have the pivot from the ECB in place, which now seems to be firmly the case, that will continue. So it doesn't hold to me that we will see euro dollar spike to 120 or something.